To put that story in perspective, Kirigo Ngaro is with Elizabeth Nkuku, who is from Saito Investments, and now to talk about, among other things, how the fate of customers should be handled and why banks are still yet to take advantage of the cushioning facility that was announced by the Central Bank of Kenya. If you want to talk to us, the hashtag TV is by breakfast, and the SMS number is still 22422. Kirigo?
All right, thank you very much, Willis Raburu, for that. And this morning we're joined by Elizabeth Nkuku. She's the Chief Investment Officer at Saito Investments. Very good morning to you, and thanks for joining us. And the first question is, many, of course, customers are aggrieved by the scenario, by the situation, and maybe we need to understand what are the main things we should be interested in when it comes to choosing a financial institution of choice. What should we be looking at? We've had the term liquidity, we've had bailout, we had so much, terminology in the banking world which can be a bit overwhelming. But what are some of the simple things we should, look out for?
Thank you. I think if you look at the banking sector or any investment that you're really taking into account and you want to invest in, understanding the people behind it, understanding the processes that are behind it, and just knowing where the bank is going or the institution that you're investing in is going is very, very important. So let's just take a point in case of the two banks that collapsed the last day. We have Imperial Bank. The management has been in the realm of that bank for more than close to 20 years. Same case to Chase Bank. It's been there for a long time. So for us at Saito, what we are looking at is how then can you tell that can this institution transition without one particular person? So just knowing who is behind the bank and how the management is governed is very, very important.
Okay.
Yes.
There's also been that argument that the longer an institution has been in existence, the lesser the chance of it going through what happened to Imperial Bank and Chase Bank. I'd want to hear your thoughts in that regard. I beg to disagree with that, because one of the key things that you realize, institutions are people. So if you understand the people that you have, the people and what they are really driven by, professionalism is important. You see, one of the biggest issues that we have is if you are in a particular institution for long, you tend to know everything. You can manipulate anything. So not significant changes in the management, but just knowing that, am I willing to live in the next 5 to 10 years? If the answer is yes, then that is a good institution. The institution can be there for long, but just look at the people who are running the institution. That is more important. So it's knowing the people behind the scenes, knowing the people who are actually running the institution. That's the most important thing. All right. I want to hear from you, who's an investment officer. If you were to give a rating, how did Chase Bank handle its crisis communication? How did the government handle the situation as well? At all times, in hindsight, everything could be done better. Yes. So it's always that thing of learning. In terms of what was done, in my view, we are told the bank is sound, it's going to happen, everything is going to be fine. Then the next day you wake up there, it's closed. Then they beg that there is a lot of questions. How come we didn't come straight and say this is the issues that we are facing? However, now looking back again, had they come and said this bank is in big problems, then everybody would have panicked. So I think it's really a blend of the two. However, if putting myself in the board of Chase Bank, this thing didn't just happen in a day. I think they would have managed that over time, because I remember when Imperial Bank went under, there were rumors that Chase is going to go under. So at that point, they would have come back and said, you know what, these are the mitigating factors we have, and whatever you guys are hearing is not true. So I think the communication should have happened well in advance. Yes. But looking at it now, it's a 50-50. You partly agree, partly disagree with how they were able to give out the communication because of what happened, right?
Yes.
Many, of course, then woke up, to go and get the money, but some were not able to, purely because they went and the doors were locked, and they've been told we'll contact you. Is there a general timeline these people can work with, or is it just a sit and wait kind of scenario?
To be honest, I think it's a wait-and-see scenario, but it will largely be dependent on what the central bank does, because they can come back and say we can support this bank, but not direct. I don't think if they came directly as Chase, they will be able to handle this, because almost everybody will come for their money. So if they take the route that they took for Imperial, whereby they told the depositors you can go to KCB and DTB, people believe in KCB, they believe in DTB, then the rush is not as much. Yeah, so I think the right way to
as I see it, the right way to do it is really getting an institution to back Chase and just let the depositors go that way.
But in general, we don't have a timeline. It's just a wait and see kind of scenario.
That's right.
Now that's very depressing and disappointing, knowing that a lot of people had accounts there, and there were those who had either the salaried accounts in there or their saving accounts in there, and now they're at this point where they can't do anything. I just want to know from an investment officer what other options I have when it comes to investing, because we're seeing a lot of people saying my fixed deposit account is there, it was going to mature in the next 2 months, and I was planning to do XYZ with that money. Now we don't know whether the bank is going to be open in 2 months, or even 2 weeks. What are the other options that are there, that are out there for me, Kirigo, who has an account with a bank that has gone under? What else can I do with my money?
First of all, for you to know where to invest, it really depends with what the money is being used for. One of the main reasons people invest in banks is because they need liquid money in short-term investments, where you can go access your money and come back. So a like-for-like investment for banks, it's largely the unit trusts and treasury bills. And for treasury bills, the beauty is most of the time, as long as the government of Kenya is there, at least you'll get paid. It's running. Yes. At least you'll be paid. Yes. So in terms of risk averseness, that is the best place to go. For unit trusts, yes, they are fund managers regulated by they invest in regulated securities, so you can go there and invest. And the beauty about unit trusts is that you have to be diversified according to the regulations. So then that's something that you can look at. However, if you're looking for long-term investments, I think the best thing is to look at property and stocks, and just making sure that as you go to invest in stocks, speak to an expert, because most of the time the companies that you think are going to do well, there's something maybe that you do not understand. So it's just good to always know what it is that I'm investing in. Yes.
And finally, as we're coming to the end, there have been talks of merging of banks, like we've seen Consolidated Bank together with National Bank and Dubai Bank could merge, become one bank. There's been talks of reducing the number of banks we have as a country. A lot of people say, come on, for Kenya, I mean, we're just 40 million, but we have over 20 banks. Do you think this is a solution, merging of banks, so that we don't see the collapse of many other banks?
To start with, I think we are overbanked. If you look at South Africa,
we are overbanked?
We are overbanked significantly.
Okay.
So for a population of 40 million, and then you have 42 banks, compared to that with South Africa and Nigeria.
And Nigeria, true.
We are significantly overbanked. So for the banking sector to do well, I think consolidation has to happen, just because you can be able to access more products and also benefit from economies of scale. So from a regulatory perspective, I think most of these banks actually do not serve the population. You have one bank with one branch, so basically that is just serving a particular population. Yes. So it will be important for them to merge, and then the products and then the competition will actually increase.
Does that affect me, the client?
Not necessarily. It actually gives you a better niche, because now you have many people to look from, and they have almost similar or diversified products.
Okay. Yes. All right, Elizabeth, thank you so much for joining us this morning to explain to us, this whole crisis in simple layman's language. Really appreciate that, and keep the conversation going. 22422 is the SMS line. Or you can get us on Twitter. The hashtag is Power Breakfast. Now I hand you over to Willis Oburu so that we can find out who our guests are this morning.